Hello, everybody, and welcome to another video. In today's video, we're going to be talking about some basic financial terms. I'm going to have to do this one in parts, guys, because, like I said, I want to keep the video short, but I also only want to give you a couple terms at a time so that you can actually study those and look up examples if you need to get a better understanding. So I don't want to give you all of them at right now. Now, before we get into this video, do make sure that you like, share, and subscribe to the channel if you're on YouTube. Like and share if you're on YouTube or Facebook. Okay. All right. So we're gonna get into 5 terms, and this is gonna end up being 4 parts, broken down into 4 parts. It's gonna be 20 terms. Okay. So the first one is called assets. I know everybody has heard of that. An asset is anything that you own. Now that's including cash, property, stocks, and bonds. Okay. That's anything that you own, that you actually fully own, not paying on it, but own. So like if you have a car and you're paying a leasing fee, you're paying a monthly note. You don't own it yet, because if you default on those payments, then whoever your lender is can come and retrieve that car because it actually belongs to them. It does not belong to you until you get a title. Same thing for mortgage. Mortgage is really no different from rent outside the fact that it is basically a rent to own situation. That's really the only difference. If you are still paying a mortgage on your house, if you default on that house, foreclose on that house, someone else gets to take ownership of that house. Or not really take, well, basically, they already own it. So they basically can kick you out and give it to somebody else to pay on and, hopefully pay it off. So until your home actually belongs to you, you have the deed with your name on it, is not considered an asset. We're going to get to what that's considered in just a second. Same thing for your vehicles. The next term, liabilities. Okay. Liabilities are debts or obligations that you owe to others. Remember I was just talking about that home that you're paying, that mortgage, the car that you're paying the lease, or yeah, those are liabilities. What it means is that you have an obligation to pay that. So it's considered owned by someone else. And so therefore you're paying them until it's paid off. So that's a liability. Don't get those two confused. In fact, an easy way to remember that is assets make you money, liabilities take your money. Not that you get what I'm saying. All right, number 3, equity. That's a term that's thrown around a lot. Equity is the difference between your assets and your liabilities. Okay. This represents your net worth. So, for instance, say you own a house, the house is worth $500,000, right? But you buy a new Mercedes Benz that's valued at $80,000, but you're paying a monthly note on that Mercedes. Okay. So you would take 80,000 away from the 500,000, which leaves you with 420,000. So your net worth, or the equity that you have, it would be 420,000. So that's what it means when it says the difference. You have to subtract your liabilities, the cost of your liabilities, from the cost of your assets or the value of your assets, and then it will give you the equity. Okay. You hear that a lot in real estate, where they say they put equity into the home. Yeah, that's what it is. They put some value into the home, because now the house that was once worth 500,000 is worth 600,000, because they've added some extra stuff, maybe done some renovations, updated some things, so forth and so on. All right. Number 4 is going to be interest. Interest is the cost of borrowing money, usually expressed as a percentage of the loan amount. Okay, so this is pretty easy. When you get a loan, or you know what? Let's put it in terms of money. When you go to the store and you buy something, and then they charge you a tax, right? So you have to pay a tax on your product. So the product's 99 cents, but you end up paying $1.10 when you get to the register. interest is that's pretty much the same way that works, where you're basically charged to borrow the money. Yeah, it's really weird to put it that way, but it's kind of it's the same concept. Okay, so like when you go buy a car, it'll say, "Oh, this one is 14,999," but then after you finance it, it turns into a larger number because that's the interest that you're being charged. Okay, principal. Now, the principal, you usually hear about this when it has to deal with loans as well. It says the original amount of money borrowed or invested, excluding any interest or dividends. Okay, so say for instance, you loan someone money, right? Say they borrow 20 bucks and you're like, well, you got to give me $25 back. Okay. That $5 that you pay that you charged was the interest. But the $20, the original $20 that they also have to give back is considered your principal. So it's the basically getting in what you or getting out what you put in, but then you also get the extra interest. Now, if you have a loan company or something like that, you'll notice that they pay you out what they call dividends. So they charge the customer who borrowed the money interest, and the person who loaned the money gets paid dividends. Hope that makes sense for everybody. All right, so we're gonna stop right here. This is five terms: assets, which is anything that you own, including your cash, property, stocks, bonds; liabilities, or anything that is any debts or obligations that you owe to others; equity is going to be the difference between your assets and liabilities. So your assets minus the liabilities, that gives you your equity. Interest is the cost of borrowing money. Okay. It's usually in a percentage, as a percentage in a loan. And then your principal is the original amount of money that was borrowed or invested. Okay. So study these terms, and we're going to come with a part two, and we're going to dive into five more terms. Okay. I hope you guys are getting some out of these videos, because it's a lot of information and it's kind of like math where it just kind of stacks on top of each other. So you really want to learn the foundational stuff, which is why we're going to take our time into doing so. All right. So thank you so much. Again, make sure you're sharing this information out. Share this video, please. Also hit that like button. Go over to YouTube and subscribe as well. We're trying to get to 500 right now. Right. We're a little bit over 100. So we are on our way, but we're trying to get to 500. So make sure you go over to the Pennywise channel on YouTube and subscribe. Until then, or until next time.